The S&P 500 closed the week with a decline, facing increased volatility and soaring U.S. bond yields. This article discusses the factors contributing to the market downturn, including sector performance, economic data, and commodity prices. S&P 500 drops 1.22% as technology, consumer discretionary, and energy sectors lead the decline. The S&P 500 index closed down at 4,450.32, losing 1.22% for the week. Technology, consumer discretionary, and energy sectors experienced the largest declines, contributing to the overall market downturn. Upbeat U.S. economic data fuels optimism of a soft landing. Positive U.S. economic data, such as the rise in the Empire State Manufacturing Index, provided optimism that the Federal Reserve may achieve a soft landing. This data helped alleviate concerns about the economic outlook. Surging U.S. Treasury yields. Add to market jitters. U.S. 10-year Treasury yields climbed to 4.334%, adding to market jitters and investor unease. The increase in yields impacted market sentiment, contributing to the downward trend in equities. Expired options and index rebalance. Spark volatility. The expiration of options contracts and an index rebalance caused increased volatility in the U.S. equity markets, leading to a more turbulent trading environment. This volatility disrupted the positive momentum seen earlier in the week. Sector performance. Winners and losers. The technology, consumer discretionary, and energy sectors were the biggest losers, each experiencing significant declines. On the other hand, utilities, real estate, and industrials were the least affected, with relatively smaller losses. U.S. economic data and Fed expectations. Despite the market downturn, U.S. economic data provided some positive indications. The University of Michigan survey showed a decrease in inflation expectations, and the New York Fed's Empire State Manufacturing Index rose sharply, indicating a stronger manufacturing sector. Speculation of a soft landing and rate hike outlook. The combination of positive economic data and market expectations led to speculation that the Federal Reserve might achieve a soft landing. Some money market futures suggested that the Fed would not raise rates in the upcoming meeting. US Treasury. Bond yields and the dollar. US Treasury bond yields, specifically the 10-year benchmark note rate, increased, reflecting the market's nervousness. The US dollar index ended slightly higher, indicating some strength in the dollar. Commodity prices. WTI oil rises on tight supplies. WTI oil prices increased by 0.56% due to tight supplies resulting from a crude oil cut by Saudi Arabia and Russia, supporting the commodity's value. The S&P 500 closed the week lower amid increased volatility and surging U.S. bond yields. The market downturn was influenced by various factors, including sector performance, economic data, and commodity prices. Despite some positive economic indicators, uncertainty remained regarding the Federal Reserve's actions and the overall market outlook.